All right, welcome. The stock market can seem super complicated, right? All that jargon, the crazy charts. But what if I told you that in just the next few minutes, we could build you a really solid foundation for your very first investment? So today, we're going to strip away all that noise and make the stock market simple. Let's do this. So here's what we're going to do. We're going to walk through 5 simple but really important questions. We'll kick things off with why you should even bother. Then we'll define what a stock actually is, look at your options, learn a simple trick to spot value, and finally go through how to do it. By the end of this, you'll have a clear path forward. Okay, first things first, why even care about investing? Why not just keep your money in the bank? Well, it really boils down to a couple of super important ideas that are impacting your money every single day, whether you realize it or not. Let me just ask you this. That money you have sitting in a savings account, you think it's safe, right? I mean, it's just sitting there. But the wild thing is, it's not. It's actually losing its power, little by little, every single year. And this is the culprit right here, inflation. It's that kind of silent thief that makes your coffee, your gas, everything just cost more over time. So that $100 you have stashed away today, it's going to buy you less stuff next year. It's a tough pill to swallow, but in this kind of environment, just saving isn't enough because your money's buying power is constantly getting chipped away. So how in the world do you fight back against that? Well, this is where the stock market really shines. Historically, we're talking about an average return of around 10% a year. Now, that's not just beating inflation, that's crushing it. It is an amazing tool for actually growing your wealth over the long run, especially when you start talking about compounding. That's a whole other story. All right, so we get the why. It's about making our money work for us. Now, let's get down to basics and talk about the what. What is this thing called a stock anyway? So what is a stock really? At its heart, a stock, or a share, you'll hear both terms, it's just a tiny slice of ownership in a business. Seriously, that's it. It's not some magical, complicated thing. The best way to think about it, it's like a giant pizza. Imagine a huge company, say Apple, is one massive pizza, and it's cut into billions and billions of little slices. When you buy one share of Apple stock, you're buying one of those tiny slices. You literally own a piece of the whole pie. And this is such a key idea to grasp. You're not just buying a blip on a screen or a ticker symbol. When you buy a share, you are becoming a part owner of a real, living, breathing company with all its buildings, its ideas, its employees, the whole shebang. Okay, so now you know what a stock is. But how do you actually buy them? Do you just pick one you like, or is there a better way? This is all about handling something called risk. You've heard the saying, right? Don't put all your eggs in one basket. Well, it could not be more true when it comes to investing. If you throw all your money into one single company and, oops, that company hits a rough patch, you could lose a big chunk of your investment. That's what they call concentration risk. So here are your 2 main choices, broken down really simply. On one hand, you can buy an individual stock. It's got higher risk for sure, but also the potential for a higher reward. On the other hand, you have something called an ETF, or an exchange-traded fund. Just think of it like a shopping basket that's already filled with tiny pieces of hundreds, sometimes thousands of different companies. For anyone just starting out, an ETF is a brilliant way to spread out your risk instantly. All right, so whether you're eyeing a single stock or maybe one of those funds, there's a big question you're going to ask yourself, am I getting a good deal here? Let's talk about how to figure that out. And that question is this. Is this thing expensive or is it cheap? Because it's not just about the price tag you see. A stock that costs $500 could actually be a bargain, while a $5 stock could be insanely overpriced. So, how do you know? Well, one of the go-to tools for this is something called the P/E ratio. That's price to earnings. Now look, don't worry about the math behind it. Just think of it like a company's price tag. It tells you how expensive a stock is compared to how much profit the company is actually making. And here's the dead simple way to think about it. Generally, a low PE ratio could mean that a stock is on sale, that it's a bit of a bargain. A high PE could mean it's on the expensive side. Now, it's not a perfect foolproof rule, but it's a fantastic starting point for getting a feel for a stock's value. All right, we have covered so much ground. The why, the what, how to figure out if you're getting a good deal. Now for the fun part, the most exciting part, taking all this knowledge and actually putting it into action. let's get down to it. And look, it's really just 3 easy steps. That's it. First, you open something called a brokerage account. Think of it like a bank account, but for your investments. Second, you put some money in it. And third, you place your order to buy. It's that straightforward. Now, when you go to place that order, you've got 2 basic choices. A market order is like shouting, just get it for me now. I don't care about the exact price, just buy it. A limit order, though, puts you in the driver's seat. It's like saying, hey, I only want to buy this if the price drops to this specific number I've chosen. For beginners, a limit order can be a great way to make sure you never pay more than you want to. Okay, let's do a quick flyby of everything we just learned, the big takeaways. Number 1, investing is how your money beats inflation and actually grows. 2, a stock just means you own a little piece of a company. 3, ETFs are your friend for easy diversification and lower risk. 4, the P/E ratio is a quick and dirty way to check a stock's price tag. And 5, you get to decide how you buy, with either a market or a limit order. So there you have it, the entire roadmap from why this all matters to exactly how you can get started. We've taken the mystery out of it. The only question left is the one for you. What will your first investment be? Thanks for tuning in.